Check out fundrise.com/pockets to learn more. What you should know right now is that nationally, home prices are still appreciating. They are up 1.4% year over year. But again, that growth rate is falling. And that really is what matters. As an analyst, what I usually try and look for, the absolute number kind of matters, 1.4%. I don't care if that's 1.4 or 2%. What I care about is trend, which way the line is going. And the trend is clearly down. Just as an example, like a year ago, last May, the appreciation rate nationally was 5%. Now it's 1.4%, and it has been going down pretty steadily. It's not volatile, going up and down. It has just been slowly declining from 5% a year ago down to about 1.4%. There's just one point I want to make here is that 1.4% increase is not adjusted for inflation. And so the appreciation rate in the US right now is now below the rate of inflation, which is roughly 2.5%-ish. And so I think this is sort of a key thing to remember is that for me as an investor, I really want my property values to keep pace with inflation. That can't always happen. Sometimes the market just turns and you can't do anything about it. But you do want to sort of adjust your expectations and what deals you're kind of buying if that's true. And right now we are seeing values lower than inflation. Now that's going to impact people who have no debt on their property more. If you have leverage, like if you are 5-to-1 leverage, you put 20% down, then you're still beating inflation because you basically multiply your appreciation rate by 5, which would be roughly 7.5%. So if you compare that to inflation, you're still doing better.